Ladies and gentlemen, Greg Bukowski from ForexLive.com. This is a Kickstart video where I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and sterling versus US dollar, and try to make sense of the technicals. I say try because it's been very difficult this week, and at least for me, I wonder for you. So let's get started, and we'll talk a little bit about that. We had the PPI data come out a little bit weaker than expected. Yesterday, we saw the CPI data come out a little bit stronger than expected. And it sort of dovetails what's happening in the markets as well as far as the price action goes. There's been a lot of ups and downs in the markets. I put a square around what has been largely the value or where most of the trading has taken place over the last 6 trading days, going back to last Friday's employment report. Yes, there was a break sharply lower after the employment report. There was a sharp break to the upside here, but what we know this week is that the high price that we saw last Friday and the employment day was the high price from trading this week. So that was probably one of the more reliable technical levels for the week. Another level that perhaps was of interest was this 109.29 level, which did a pretty decent job. I have to go back to back here, and even before this, there were some levels through here, but we had a ceiling right there, and then we had a floor through here near that level before moving to the upside. We came and traded above and below the levels through here and here and here, and then back down below it here, and then we used it here and here. We fell a little bit below it here, but then failed to move to the upside. We came back down to it here. We got a little messy here earlier this week, but then reestablished support against that 29 level on Wednesday and again yesterday. So this level right here is probably the most reliable of the technical levels. In between, there was just a bunch of ups and downs. Look at the chart, and I think it makes sense. Why? Because it's congruent with what's going on in the market. We had CPI come in higher, we had PPI come in lower. We have Fed officials who are saying that 6 cuts in 2024 is too much. I think that makes sense, but is there room for cuts? Yeah, why? Because, the Fed funds rate is at 5.5%. Inflation is coming back down towards 2.5%, 3%, maybe moving back down toward the 2% later in the year. We'll see. But that real interest rate spread between where inflation is and where the Fed funds target is maybe a little bit wide. And so there is certainly expectations that there's no need to raise rates any further, especially when they're cutting things like QT or keeping the QT tightening going on. And there is a reason to perhaps cut rates going forward just to get things more in line. So that kind of dynamic in the economy through Fed officials, through data, through what we're seeing on the chart is what we're seeing. And I think buyers and sellers are a little bit confused about what may happen or what should happen. And we swing from one ebb to the other. And as a result, we see ups and downs in the market. So technically, watch the 109.29 level here today. If you don't want to do anything, take the day off. Maybe on the top side, watch the 38.2% retracement of the move down from this high to this low. We still need to get above that level to show that the buyers mean more control. Above that, we move toward these 109.98 level and 50% retracement and get above that level. It's more upside potential. On the downside, if we break below the 29 level, then look toward this 109.09 level. The low price here, and if we get below that level, we look down toward our low prices through here, which form this swing area between 108.76 and 108.94. That's the best I can do for the euro versus US dollar. Let's take a look at the dollar versus yen, and we saw the price move lower after the PPI data. That moved to the downside, did break below the 100-hour moving average. Now, the importance of that is we did hold support against it here. We did hold support against it here, and initially we moved down and tested that 100-hour moving average, but as you can see, we broke below the level, but could not go very far before rotating back a little bit more to the upside. But we are, I guess, looking at it now, staying below that level. Right before we started, the price was back above that level. So we are trading above and below the 100-hour moving average. That will be our barometer for this currency pair in the going forward and trading here today. I'm going to put a Fibonacci retracement from this low up to the high. and see how that measures out, especially for the 38.2. And this 38.2 is of this bigger move down from the November high to the December low. So we are now testing that level. But on the downside, the 200-hour moving average and the 38.2% retracement of this move to the upside is the next targets on the downside. What we do know fundamentally is that in Japan this week, the wage data did come out weaker than expectations, and that should weaken the yen, and that sent the dollar yen to the upside. But we are seeing that rotation back to the downside here. But look for support perhaps against the 200, against the 38.2% retracement. We'll see if those levels can hold on further downside momentum. Being below the 100-hour moving average still to bias a little bit more to the downside for that pair. Finally, let's take a look at this sterling versus US dollar. And if you thought the euro was bad and the dollar versus yen was bad, the sterling versus US dollar is a mess, if you will. The 100 and 200-hour moving averages have done very little in the way of trying to hold support or hold resistance or find a bias or what. You see a lot of failures on breaks above, breaks below. But for them, if we were to look at this chart, we've been more above the moving averages than below it in trading this week. Does that give it a more bullish bias here? Perhaps. Watch the 127.71 level. That level was a high price going back over here, and we did move above it in trading yesterday and failed. We moved above it again today and moved lower. The 127.71 level, get above that level and stay above that level is more bullish, and then we start to look toward this swing area at 127.88 to 127.99 or 128 on the top side. On the downside, if we break back below the 100-hour moving average, I guess you go with it, but every time the price moves below the 100-hour moving average, it's not for long, so be aware of that dynamic. My name is Greg Michalowski, frustrated perhaps like you. Good fortune with your trading, though. Bye-bye now.